What's up, guys? My name's Curtis and welcome to 5-Minute Finance, where I take personal finance topics and explain them to you in 5 minutes or less. When it comes to retirement investing, there are two main account types that people use, the IRA and the 401k. Both have their own pros and cons as well as legal requirements, so let's compare the two. To start, let's talk about the IRA. An IRA is an individual retirement account and anybody that earns income can contribute to one. In 2020, the annual contribution limit for an IRA is $6,000. But that limit has increased over the years, and it most definitely will increase in the future. With IRAs, you can choose between pre-tax contributions, which are considered traditional contributions, or you can go Roth contributions. If you want to know more about Roth, I'll have a video linked in the description, but I will tell you Roth is extremely powerful. However, if your income is above $124,000 for individuals or $196,000 for married filing jointly, you cannot contribute to a Roth IRA. But you could still contribute to a traditional IRA. Lastly, you can begin taking withdrawals from an IRA once you reach age 59 and a half. If you want to withdraw before that, there will be penalties associated. But you can technically withdraw from an IRA before age 59 and a half for a couple different reasons. The first would be there are certain expenses that you are allowed to use IRA funds to pay for. Some examples would be a first-time home purchase, maybe certain medical expenses, some education expenses, and a few other things. The other reason is associated with Roth IRAs. If you have a Roth IRA, any money that you contributed, you've already paid taxes on, so you can withdraw that money at any time without penalty. But you can't withdraw any gains that money has made from your Roth IRA prior to age 59 and a half without taking a penalty. So if you contributed $6,000 to a Roth IRA and it grew to $12,000 over the course of a few years, you could still take that $6,000 out tax-free without any penalties. But if you wanted to take the full $12,000 out, you would have to pay penalties on the $6,000 in gains. Even though it's an option, I truly don't think you should be withdrawing funds from an IRA unless you really need to. Retirement funds should be used for retirement only. Now, let's talk about the 401k. This is a retirement savings account that is offered by employers to their employees. This means that you can only contribute to a 401k if you're employed and your employer offers this benefit. When it comes to the 401k, there is also a yearly contribution limit, but the limit is much higher. You cannot contribute more than $19,500 in 2020 to a 401k. But similarly to IRAs, the contribution limit has gone up in previous years and it's probably going to go up again in future years. In many cases, you're only allowed to contribute to 401ks with pre-tax money, or again, traditional retirement contributions. If you're lucky, your employer's 401k plan will also allow you to contribute Roth and after-tax contributions. And the best part about Roth contributions in a 401k is there is no income limit. Regardless of how much money you make, if your employer offers Roth contributions in a 401k, you can put the full $19,500 into Roth assets. In addition, most employers that offer a 401k plan also offer a company match. This means if you contribute money to your 401k account, then your employer will contribute that same amount up to a certain percentage. Guys, this is pretty much free money, so anybody who has the option to contribute to a 401k that has company match should absolutely be doing it. Similar to IRAs, there is a minimum age in which you can withdraw from a 401k without penalty, and you guessed it, it's 59 and a half years old. There's one caveat, and that is if you retire from the company that sponsors your 401k between the ages of 55 and 59 and a half, you can actually start withdrawing immediately. But again, that's only if you're above age 55 and you retire from the company that your 401k is currently held with. Lastly, you can also take a loan from your 401k, but again, I wouldn't recommend taking any money out of your retirement accounts unless you really have to. One more thing I want to touch on is the different asset options that you have between IRAs and 401ks. 401k plans generally have specific stocks, bonds, or mutual funds that you're allowed to invest in. You can't quite invest in whatever you want, but that's usually not an issue in 401k plans unless your options are very limited. With IRAs, on the other hand, you can invest in absolutely whatever you like. Could be Tesla stock, index funds, real estate funds, or even your own private business through what's called a self-directed IRA. So IRAs are a little bit more flexible in terms of the assets you can hold within them, but 401ks also offer a lot of benefits that IRAs simply can't. So which is the best option? That kind of depends on your situation, but this would be my recommendation. If your employer offers Roth 401k contributions, then I would just contribute as much as I could to that, and if I did end up hitting the limit, then I would open a Roth IRA. If your employer only offers traditional 401k contributions, but it does have a company match, you should contribute at least enough to your 401k to get the full company match, and then open a Roth IRA and try to max that out. If your employer doesn't offer a 401k, or maybe you're self-employed, you should absolutely still save for retirement in an IRA, preferably a Roth IRA. I hope this video helped you guys understand the differences between the 401k and the IRA and which one might be best for you. If you enjoyed the video, please give it a thumbs up. It would really help me out. I'd really appreciate it. And if you're new around here and want to see more videos like this, consider subscribing.